Interest rates are increasing and it looks like they're going to increase for the next couple of months according to the RBA. It's really making it quite challenging for people who have mortgage repayments to make. And seeing the price of groceries double since the last time I went shopping, because I've now been getting HelloFresh and Marley Spoon, is absolutely ridiculous. We've seen interest rates increase month after month with no end in sight. Consumer confidence is low at the moment, consumer spending is decreasing, business confidence is low, all in an attempt to make the economy slow down, and we are seeing the effects of it at the moment. However, interest rates are still quite high, but until interest rates actually fall, home loan repayments are still quite high. Now, if you're looking to pay down your mortgage faster, yes, you can say, oh, I'm just going to allocate an extra couple of $100s per month towards paying down my home loan. Well, it's easier said than done. It's important to realize what this actually looks like and what steps you're going to take to get you there. If you have a proper plan in place, then you're going to be able to execute, it's going to be more efficient, and you're definitely going to be able to pay down that home loan quicker, as opposed to not having a plan and just saying you're going to pay it down. You're really just saying an empty promise to yourself. So here are 5 ways that you can pay down your home loan faster. 1. Switch your monthly repayments to either fortnightly or weekly repayments. So we're going to use a calculator here just so I can explain it a little bit better. So say you've got a home loan worth $800,000, say the interest rate is about 6% and your loan term is for 30 years. Now, as you can see, if you've got monthly repayments, you'll be paying about $4,796 per month, and the total interest over the lifespan of your loan, so that's 30 years, is $926,000. However, if you were to switch from paying monthly to fortnightly, you can see that your repayment decreases. Now, your repayment will go down to $2,398, and the interest that you've paid over the lifespan of that loan is $728,000, essentially meaning you've saved about $198,000 in interest, which is absolutely crazy. Now, you can see here as well, which not only will you save on interest, but it will also save you some time, and it will cut off about 5.5 years off your loan. Now, you can also see here as well the weekly repayments. Obviously, it's lower. In terms of the interest saved, it's not too different to the interest saved for fortnightly, and obviously in terms of time saved as well, it's quite similar. And having your repayments paid weekly can be a little bit of a nuisance, especially if you are getting paid through your job on a fortnightly or monthly basis, but you've got money coming out on a weekly basis. It just makes it a little bit harder when it comes to budgeting that. Now, when you are paying monthly repayments, if you think about it, in that whole year, you're only going to be making 12 repayments towards your loan. Whereas if you switch it up to a fortnightly payment, then you'll be able to make 24 repayments towards that loan. So that essentially means that loan balance will decrease even faster. So there's one way that you can definitely pay down your loan faster, just by making that small switch over from monthly to fortnightly payments and having it aligned to your pay cycle as well. 2. Make additional repayments. So let's use calculations here as well so you get the full value in looking at the figures that you're actually saving on. So if we were to put through $800,000 as your home loan, 6% over 30 years, and let's say your repayment frequency is monthly, and say you were going to allocate an extra $500 per month towards your loan, you can see that your repayments go from $4,800 a month to about $5,300 per month, and that can save you about 6.5 years on your loan term. And if you have a look at the interest saved as well, just by putting an extra $500 a month, you'll be able to save $232,000 over the lifespan of your loan in just interest payment. Now, what if we were to combine this with making additional repayments along with fortnightly repayments? Let's have a look what that looks like. So if we were to change that to fortnightly, and obviously $500 extra a month, fortnightly would be half of that, so $250, we can see here that you can save about 7 years almost on your home loan. And in terms of the interest saved, it's about $246,000. Now, of course, this scenario won't work for everyone. You might have less time left on your loan, but it's important to see the different options that are available if you are looking at paying down your loan faster. Now, in terms of making additional repayments, you might think, where are you going to get that money from? And you might not be super convinced on the idea of making extra repayments. But if you were to think about, say, your investment portfolio or maybe a property that you've purchased, and say we take a conservative rate of about 5% growth, and if you decide to compound that over 30 years, what does that portfolio, what does that property look like in the next 30 years? Is that a number that you're happy with? And obviously we need to take into account inflation as well. Is that a number that you see in the next 30 years that you're going to be happy with? If not, then it might be a good time to start making those additional repayments and looking at alternative streams of income where you can generate extra money to put down towards your home loan and pay it down faster. And obviously we've got time on our hands. Being as young as we are today compared to in the future, it's going to be easier to look at opportunities around side hustles. If you're thinking of making some passive income and you don't know where to start, I've actually done a video on this last week, which I'll leave above here and also down below as well, so make sure you check that out. There are always going to be opportunities out there. It's just up to mindset. You can make things happen, otherwise things will happen to you. 3, not paying off your loan. This is an interesting one because you might be thinking, how can I pay off my loan quicker if I'm not actually paying down my loan? Well, this is where an offset account comes in. This is usually set up for you when you get a home loan. However, most people don't actually know the purpose for it and how it actually works. So, say you have a loan of about $500,000. Now, typically you'll be charged interest on that full amount and you'll have to make repayments on that full loan amount. But let's say you've got $20,000 sitting in your offset account. So you've got your $500,000 loan here, but you've got $20,000 in your offset account. Now, how the interest will be calculated is that that $20,000 will be deducted from that $500,000, leaving you with $480,000, and that is what you pay interest on. The bank does this because they can see that you've got that money in that bank account. You could use that money to pay down the loan. However, you've got it in an offset account, so they do give you that benefit of reducing your loan. So the higher you have in your offset account, the lower your interest is going to be in terms of what you pay for the total amount. So let's have a look at the difference of what an offset account actually makes with numbers. So let's say again here we've got $800,000 for our loan, 6%, 30 years, monthly. Now let's say our offset account has a balance of $20,000. We can see here that if we've got $20,000, we can save about $93,000 or $94,000 worth of interest. Now that is also saving us about a year and 7 months off our loan term. Now let's compare that to $100,000. Say we've got $100,000 in our offset account. As you can see, you will then save about $369,000 from interest payments, and it'll also cut down your loan term by 6 years and 5 months. So this can be quite a helpful way if you don't want to contribute directly to your home loan because you want that money on the side, say for your savings as an emergency fund, but you'll still be able to pay down your loan and save some time off your loan. A lot of people tend to credit their salaries or their rent or any additional income that they get into this offset account so that it does actually offset the interest that you have towards your loan. 4, find a lower interest rate. Comparison websites like CanStar or finder.com.au are great websites to see what other rates look like around you. All of that can seem quite confusing looking at different websites. So what I do recommend is speaking to a mortgage broker because they have access to multiple lenders and the product offerings, so they would know what bank is offering the best rate for you. However, a lot of people may just step into a bank as well. However, they're only going to provide you with a rate that they've got, and they've got a biased opinion as well. So speaking to a mortgage broker is the better option because they can look at either refinancing your loan for you or looking at bringing down that interest rate. 5, avoid an interest-only loan. Having an interest-only loan means that you're not actually paying down the principal of the loan. So when you set up a loan, you've got the principal component and the interest component. Having an interest only means that you're paying just the interest component, so the principal is never being paid down. Typically, interest only loans are only available for 5 years. However, if you are looking at paying down your loan faster, it would be a better idea if you can to switch it over to a principal plus interest loan, and these interest rates on these loans are also much lower as well. having an interest-only loan means it's got a higher interest rate. This can all be quite difficult to navigate, especially during times like this. So I highly suggest that you speak to a mortgage broker. They've got access to multiple lenders, so you will know what is the best deal at the moment for your scenario. Sit with them and let them know that you're wanting to pay down your loan quicker. They can also display some tips and tricks for you as well. I hope you found this video useful. Any questions, leave them down below, and I'll see you in my next video. Bye guys.